Good morning, all. Friday 13th. Always a good day when I see a Friday the 13th. Personally, I kind of like them. So this week had a lot of stuff going on as far as things that are influencing the market. Last time I showed you how, in fact, I'll just show you the chart right now. We had the market was still within the channel and is coming right up. It was staying in it, but now we've had things getting a little bit more out of hand. So things actually got really wild this week. As you can see in the 3.0, it dropped significantly. So a lot of negative movement. Then we had some coupon rollovers. You know, the mortgage bonds are a very finite security. Every month it rolls over, and it does influence the price a little bit. But we saw a lot of volatility. What that puts us outside of that channel, right? Because we remember we were talking about getting squeezed. We got squeezed out of the channel. But it was interesting. We stayed within it when I last talked. Right here. Stayed in the channel, was right up out of it, but then the next day just fell hard. So this is with your 3.0, but let's take a look at at the 4.0. Interestingly enough, the 4.0 has actually held out really, really well. The 4.0, it'd be the higher coupon, therefore one of those ones for higher risk type deals because they're going to get a higher return. Therefore, that's going to be more like your investment properties, right? So again, this is the universal mortgage-backed security. This is the one where you got the U.S. Treasury dumping money into, keeping those pools full. This is not where we're getting our money to fund investor loans, but this is the closest I can get to at least understanding what's happening in these markets and what I can anticipate. That being the case, we're still seeing some upward movement every day. We're seeing a lot of these green candlesticks, meaning more money going into those pools. Well, with this upward movement, this does tell us, of course, that the interest rates are going down because there's supply. Upward movement means there's a greater supply of money going into these pools than what's coming out. The higher the supply, the lower the price, therefore the interest rate goes down. So that's what we're looking at here. We're seeing this drop, or at least this increase, therefore rates might experience a drop. So that right there, I think that we're still, as far as investors, in still good shape. And I'll continue to argue with the best interest rates ever in history that I'm aware of. When you take out that little window from May of 2020 to March of 2021, when there was all that capital being shoved into the mortgage-backed securities by the Fed, and then we got that stripped away from us because we have the Fed mandate to Fannie and Freddie in March that they have to limit their exposure to investors in second homes. Now we're going directly to the market, and the market is giving us great rates. So rates right now, if you want to sit around and shop rates, feel free, but shopping rates is going to waste a lot of your time in a market that just makes a lot of sense, especially with inflation. Now, interesting inflation news today. In fact, I'm not going to show you any charts on that one. Actually, I'm going to get in some charts in a second with respect to rents, but the core inflation came out this week, right? And they were saying it's somewhere right around, 5, if I remember correctly, it was like 4 I can't go off the top of my head what that was, unfortunately. But then, because when you go into the core inflation, they're stripping out food and energy costs. At least, and we know for a fact they're not even looking at these because there's substitution models and all that kind of stuff. So they're definitely not looking at the way they should. But when you look at the rent component that the Fed was referencing, they're saying that rent's going up 0.2 month over month and 1.9% year over year. Now we know that's complete bull. We know that they're not looking at things accurately because we have seen rents are more like 10 to 11, actually more than that % year over year, right? When you factor all things in, if the real rate of inflation, that their core rate, if they pull just the rent component, the real rent component, the core rate would be over 6.8%. So when you start factoring all the other things they're not looking at, you're also going to see that it's that's where we get shadow stats to kick in. We're closer to 12, right? So go to shadow stats, take a look at that. Let's take a look at something else, which I thought was really, really interesting. Happens to do with Zumper and their rental data that they put out. So if we take a look at this, so I'm gonna go ahead and do some scrolling here if I can get my computer play nice with me. So this is what it's saying, national rent growth, just for 1 bedroom and 2 bedroom apartments. Look at that. 1 bedroom, you're getting 7%. You're getting nearly 9%. With a 2 bedroom, that's not even the single family. Single families are seeing 7+% as well. So when you're averaging things out right now, in certain areas, we're seeing even higher than that. What's really interesting about this factors in the national rent growth. So why is that a big deal? Well, there's a lot of places that lost rent. Look at this, big cities, they went down significantly, like 17%. This is all your bottom 92 cities doing here, and your next, the top 8, and then the second 8. Second A is this gray line, your green line here, some might call it blue, lighter blue, right? That's the bottom 92, right? So if you start factoring everybody else into it, when we start seeing those higher amounts, you start seeing those, nearly 11% nationally. Now, this is just with apartments. Let's take a look here. This is why, many of the investors I work with, that live in the big cities, New York, or they live in the metropolitan area, like in the West Coast, look at what they're not investing there. This is why. Look at this. I mean, Minneapolis, Minnesota, look at the rents. Now, why would Minneapolis be declining like this? Why would those rents drop 15%? What happened this last year? What's going on out there? What's happening with the law enforcement out there? Think about those things. Those things have an effect. And now we see the effect. Now, when you're talking about the people that are going to spout off on the news, they're not going to look at these things and the effect that has on real human beings. San Francisco, same thing. We got things going out there in San Francisco. A lot of people aren't like it, right? Philadelphia, Oakland, Seattle, Hawaii. I mean, look at that. They're trying to keep people in these cities. They're having to drop the rents. So that's what's causing that. Start looking at the rents all over the place. We just so look at this data, read this article, pretty amazing information. So that's Zumper's rental price data. This is what we want to look at. So what is this telling us? Rents are going up across the board for everybody. And the reason that I want to point that out is when you're talking about real estate investing, you want to be sure that you're investing in places that rents will continue to rise. That's where we're focusing most of our energy at. That's most of the people we're talking about in the turnkey world. They can't make money in the in those markets. You're not going to be able to sell something at those extreme prices and get enough rent to make it make sense. So we definitely want to go into those areas where it makes sense. Another thing to take a look into, the lumber's starting to come down. Good thing, right? But don't expect it to be translated to lumber prices on the street yet. Because remember, lumber suppliers probably bought up tons of it at higher prices. Now they're storing it. They got to sell. They're not going to sell it at a loss, right? So because of that, they're going to have to unload a lot of that. They're probably not going to buy a bunch of the inventory that's on there now because they may end up in the same problem of having too much inventory at a higher prices. Prices are dropping. So we will see it take time to bleed out into the market for us to see how these lumber prices are going to affect us. It's going to take a little while. So if you're if you're looking at new builds, just know the price is probably going to still be up there for a little while before we start seeing it. And who knows what's going to happen, right? We don't know what's going to happen in the world. We have too many things happening for us to determine a date that's going to the actual prices will be influenced, the retail prices. So if you can get your hands on stuff and you need it done, just do it, move forward. We have property values continue to go up, prices continue to rise, rents continue to rise. It's great to be an investor. Inflation's on the rise. We can't ever stop that. So lock in that 30-year fixed money, keep your prices or your costs set while everything goes up and the instrument, the US dollar you're paying it back with declines. We'll talk to you guys on Tuesday.